Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having a fantastic day today. Bitcoin has been moving aggressively sideways for just over 1 week. And looking at the horizontal consolidation we are currently in, we are seeing a lot of similarities to that prior multi-week consolidation we had prior to the break into 120,000. In today's video, we are going to be discussing what this horizontal consolidation means, what are the key levels you should be paying attention to, and what the next moves are going to be. We'll also be taking a look at the upcoming weekly candle close for both Bitcoin and of course, the total cryptocurrency market cap, as well as discussing the upcoming economic news, that being the interest rate data in just over 3 days. By the end of today's video, you will have a detailed and well-rounded understanding of exactly what is happening on the short term, the key levels that you should be paying attention to, and of course, the likely next moves. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram with the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, join us in VIP. To do that, click the pinned comment of the free channel, contact our admin by clicking this name, check out our 53 plus month trading track record, or watch a 10-minute video showing you inside the channel. With that being said, guys, let's jump on in. So in just under 24 hours from now, we have got the upcoming weekly candle close, and the weekly candle close is going to be of utmost significance for the total cryptocurrency market cap, as the RSI has just broken through that downtrend and the price is sitting just above that prior weekly range high. Holding above this level will be very important moving into a new week, as it could facilitate market-wide continuations upwards. Of course, breaking back below this level on the weekly will confirm this move as deviation from the range and will likely result in corrections for the broader cryptocurrency market. Of course, with Bitcoin being the lion's share of the market dominance, around 61%, as we can see per this Bitcoin dominance chart, the directional moves on Bitcoin's short-term price action will play a massive role in determining whether or not this range high on the cryptocurrency market cap will sustain or whether or not we will break it down. And that is, of course, why we're going to be diving deep into the short-term price action today, exclusively discussing what this consolidation means and how it is developing. Going ahead to jump into all of that, let's start on the market data. We have seen a little bit of volatility during the previous week. Of course, we're in the weekend now. Volume and volatility does generally drop down during the weekend. We can see here with volume down 54% at 187 billion. Liquidations down a whopping 75% at 123 million. Looking at the 123 million, the majority of those liquidations coming from Ethereum. Ethereum's still showing a pretty large degree of volatility, a fair amount coming from altcoins of 11 million over here, and only 8 million coming from Bitcoin. Looking at the 24-hour liquidations, with a total of 123 million, 77 million come shorts and 46 million coming from longs. So again, not really all that much discrepancy between the two. We have seen a little bit of a discrepancy, but more or less we're just seeing some sideways chop over the past 24 hours as Bitcoin did push back to that 118,000 level, the POC level, the point of control, essentially the mid-level of this macro, or should I say, this horizontal consolidation. Moving over to the DXY. The DXY is holding relatively steady again, not expecting too much to happen here as we move into the interest rate release. The interest rate release is in 3 days and 17 hours. Currently, the probabilities are 95.9% in favor of an interest rate pause. It is not so much the interest rate decision that will cause volatility in the market, since the market is most likely priced in the fact we are going to see an interest rate pause. It is the narrative that will be pushed in the Federal Reserve interest rate meeting, the press conference 30 minutes following the interest rate decision. Whether or not Jerome Powell pushes a bullish narrative or a bearish narrative or uncertainty will massively influence the short-term direction of the markets and cause a lot of volatility. So as always, when we move into these interest rate decisions, expect volatility and prepare for volatility. But of course, again, as always, the narrative pushed by Jerome Powell can definitely form the foundation for what is expected moving into the weeks and months to follow. Moving over to the S&P 500, the S&P 500 is looking very good. Of course, we reached that $6,400 target. Again, we are expecting continuations toward the upside, 6,500 being the next psychological level and the next target, provided we remain above 6,330, which is essentially this local short-term high here, now flipped into a level of support. If we sustain above here, expect continuations. If we break below this level, that is when we expect corrections to begin for the S&P 500. So all in all, looking relatively good. That is it for the broader markets, guys. Let's go ahead and jump into Bitcoin. Like we mentioned, we are going to be discussing the weekly charts for the Bitcoin price action, the total cryptocurrency market cap, and the altcoin market cap. We are also going to be taking briefly a look at the 4-year cycle, the short-term consolidations, what this consolidation means, where Bitcoin is likely to move to, how the hourly charts and 4-hourly charts are shaping up, what are our targets, what are our trigger points, best and worst case scenarios, and even discussing it as a fractal in comparison to our prior consolidation. What are the similarities? And how can this show us what potentially is going to happen next? We'll also be briefly taking a look, guys, at macro expectations and targets in the video today. So before we get into all of that, make sure to go ahead and sign up to BitGet, BitUnix, and BingX with the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45%. You'll go ahead and support me making this content, and you'll support yourself in your trading journey by trading on exchanges I personally use and I trust. Go ahead and check it out. We'll play an ad and we'll jump right back into the video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump right back into the content. So taking a look at the upcoming weekly close, starting on the high time frame, then building it into the short-term charts. As we can see, the weekly candle close is occurring in just under 24 hours, and the price for the total cryptocurrency market cap is sitting in a very good position moving into the upcoming weekly close, and that is sitting above the price of 3.73 trillion, provided the market capitalization remains above 3.73 trillion moving into the weekly close. And after the weekly close, the total cryptocurrency market cap is looking very healthy. We do have one risk, which is if we were to break back below the $3.73 trillion level, we could mark this recent move above as deviation. Furthermore, we would likely develop into a bearish divergence on the RSI, which could increase the potential for corrections back to this break of structure level at 3.5 trillion. So we could see a market-wide pullback. Will this be the end of the world? No, but it will be a significant pullback, particularly for the altcoin market, as anytime we see any sort of corrections in the market, we see the more speculative assets begin to sell off more aggressively, with Bitcoin dominance expecting to then continue upwards. However, while we remain above 3.73 trillion, the expectations are that this has been a breakout. So we have got a change of character over here. We have seen a breakout of this prior weekly high, and it is more likely than not, while we sustain above, that this will sustain and facilitate a level, or should I say, enable this level to turn into a point of support, which could facilitate continuations higher. This, of course, is the most ideal scenario. As we just mentioned, however, Bitcoin dominance is still very high at 61%. So for the total cryptocurrency market cap to continue upwards, or even see the correction downwards, the main driver for that move is going to be what happens with Bitcoin. And of course, Bitcoin is sitting in a horizontal consolidation, meaning we are moving mostly sideways. The directional continuation downward or even upwards is going to be entirely determined by the reaction of the price action breaking through the range high of the horizontal consolidation or the range low. And the breakout point of this horizontal consolidation will spill over to the total cryptocurrency market cap, influencing whether or not we sustain above 3.73 and continue upwards, or break down and correct into that $3.5 trillion level. So the weekly close in itself is not significant in itself. It is more so showing us that upon the closing the weekly, we have sustained for a longer period of time above this level, this range high at 3.73, which goes to increase the potential that we will continue to sustain above and continue upwards. When we're looking at the weekly close or closing price itself, the only significance of the closing price is that we do close above 3.73 on the total cryptocurrency market cap. And for Bitcoin, we are not specifically looking at a weekly closing price. We are watching more so the reaction at these lows, provided we remain at least within the channel, which is a highly likely occurrence moving into the next 24 hours. It is very unlikely we break back below here in the 24-hour period, particularly it being on the weekend. We'll discuss that in more detail in just a second though. So when we look at the weekly candle close, the only real level of significance we are watching for the weekly close is 3.73 trillion on the total altcoin market, total cryptocurrency market. Moving over to the total altcoin market cap on the right hand side, we did see a breakout of that major level of resistance at 1.06 to 1.03. However, of course, we did not sustain above that region, dropping back below, coming back to that psychological level at $1 trillion. And of course, that retest of $1 trillion happened to occur around the same time the total altcoin market cap, the total cryptocurrency market cap retested the prior weekly range high, and Bitcoin retested the sell side liquidity of this horizontal consolidation. Again, zooming into the sell side liquidity, we said already the 1.15 to 1.152 level. So again, that 115,200 to 115,000 level was retested. That's our sell side liquidity, which has been retested. All of that occurring at around about the same time. But since then, we have seen a bit of a bounce in the market, bouncing from 3.73 and of course bouncing from that $1 trillion level, now retesting this prior level of resistance as again another point of resistance. We're coming back to challenge this 1.03 to 1.06 level as a point of resistance. Rejections from here will very likely push the altcoin market cap all the way back down to 940 billion if we fail to break through. And again, failure to break through this region will come as a consequence of the total cryptocurrency market cap being unable to sustain above 3.73. And for that to occur, Bitcoin will need to break back underneath the range low. So you can see how all of these pieces of the puzzle, everything really comes back to this consolidation. Everything comes back to how Bitcoin reacts within this consolidation and where Bitcoin goes. And that's what we're going to go ahead and talk about in a second. But looking at Bitcoin dominance, we said in our prior video that Bitcoin dominance was retesting the 50 EMA, and we've come back down to retest it after correcting pretty aggressively over the last week. In fact, that was the largest single weekly pullback for Bitcoin dominance ever since 2022. So a single red candle for Bitcoin dominance, the largest since 2022. So they're pretty significant here. In 3 years, we saw the largest weekly pullback. And of course, we pull back to the 50 EMA, saw a bit of mean reversion pushing back upwards. And we've talked about this change of character level. This level is the point of which Bitcoin dominance needs to stay under. If Bitcoin dominance stays underneath this level here at around 61.9, the hope for altcoins to continue upwards is still on the cards, okay? The potential for altcoins to still break through and have an aggressive rally is still there. We only run the risk of Bitcoin dominance significantly pushing up and altcoins beginning to aggressively bleed against Bitcoin if we break a weekly candle back above the change of character. If we get back above the change of character, we expect Bitcoin dominance to push all the way back up to around 64 to 65%. So that would mean altcoins performing very, very badly against the Bitcoin pair. If we see Bitcoin dominance break the 50 EMA, we would expect again a strong corrections to around 57% down into this point of liquidity. That is how we are watching the Bitcoin dominance chart. Watching the Bitcoin chart to really go ahead over here to get a pretty good understanding of how altcoins are going to develop and how the total cryptocurrency market cap is going to move and thus influence the Bitcoin dominance chart and altcoins. So it all links in together. Moving over to Bitcoin, this is the most important part of today's video. What we can see is we have a very clear horizontal consolidation developing for Bitcoin. And we have been moving in and out of horizontal consolidations for quite a long time now. We can see we've had another horizontal consolidation on the 4-hourly chart. That was the horizontal consolidation between about 100,000 and 110,000. We are currently sitting in a consolidation between this 115,000 and $120,000 region. As we can see here, we had our sell side liquidity. It was reached and we bounced from the sell side liquidity into the POC level, the point of control, essentially the middle level of the horizontal consolidation, and generally the middle level is the point of where we see the most trading volume within the current range, and that is represented by the fact that we have the POC here, the point of control. When we're looking at directional moves up and down being movements above the range high, so above 120,000 and below 115,000, these moves will result in directional continuations of significance of the total cryptocurrency market cap, which will influence the altcoin market cap and Bitcoin dominance, as we've said. When we are looking at the next move, we need to see the price either break through 120 or lose 115. Until then, we can continue to see Bitcoin chop sideways from the range high to the range low, or just within the middle of the range for a very long period of time, for the next couple days. It is actually likely we see that occur until we have that interest rate decision in 3 days. I'm not expecting any significant price movements until we have that interest rate decision pass us. Of course, interest rate decision being that of uncertainty around future interest rates, the market is unlikely to have any reactionary move up or down moving into an uncertain period. It is more likely to hold steadily as Bitcoin dominance slightly suffers as the market pulls back. The altcoin market slightly corrects, moving into an event of uncertainty. When we're looking at breakdowns of 115,000, that would be very bad for the market. Of course, a loss of 115,000 would result in the price entering this low historical resistance range. The next level of support being around 112 to 100, or should I say 113,000 to 113,800. Simply put, this area of price action is going to be the next level of support. It is not too much of a concern if we come back down to retest this level. It'd be very concerning if we lose that 113,000 level, as that would result in a correction to 110, and that would most definitely cause the cryptocurrency market cap over here to drop into that 3.5 or at least below 3.73, and of course the altcoin market cap to drop up to 940 billion. So we'll see market-wide corrections if we see that aggressive market-wide corrections. For the move toward the upside, if we break through 120,000, this would flip 120,000 into a point of support, which could facilitate continuations into new all-time highs. When we are looking at something like the Bitcoin BLX chart over here for, of course, the 4-year cycle. The 4-year cycle does suggest 2 potential top dates, the 6th of October and the first week of August. Again, the 6th of October being the 1064 bar theory and the first week of August being the negative 2-month theory. Both of these potential top dates have potential top price predictions. Okay, if we're looking at the price predictions for these dates, will bring us to around about 131 to 136 to 144, this range. 131, 136, 144 are logical price targets. Again, what we do is we look at the overall uptrend, the resistance, uptrending resistance. We draw in our vertical price, our vertical date points of significance, so the 1st of August, the 6th of October, and then we look at the lowest point of support, which is the directional trend we have been in since, again, the bottom here at around 76,000. Looking at those points of significance, we have got 130, like we said, 131, 136, 144,000 as potential top targets. So we can see already there is potential that Bitcoin does move into new highs, but for us to even facilitate that move, we need to break through 120,000 first. Here is something very interesting. When we are looking at the prior consolidation and the current consolidation, we see a lot of similarities. Number one, we had this short-term consolidation followed by a rapid increase in price action, followed by a correction back into those lows. Then we developed a horizontal consolidation with the deviation to the low side, followed by a breakout of the range high and continuation upward. When we're looking at the current consolidation, we have a very similar pattern where this horizontal consolidation at our sell side liquidity, followed by an explosive move upwards, followed by a retest of the sell side liquidity, a retest of the range high, a developing a horizontal consolidation, followed by a deviation to the range low, which, if we follow the same fractal, could result in a continuation into new highs. So we have got a very similar pattern developing here in this consolidation, almost like a mini version of what we saw back here between May to July. And if we do see that play out, the measured move would be the range low to the range high applied to the breakout point, which could take us to around 125,000 as a potential target for Bitcoin. And again, that is assuming that we break through the range high. If we do not break through the range high and instead we break the range low, we will see corrections to the market. So the market right now, it is overall, again, still looking very healthy. We are sitting again above very important levels, but when we're looking at our key dates for 4-year cycle tops, we are coming close to those 4-year cycle tops, and therefore we have to be aware that maybe the 4-year cycle doesn't play out. Maybe we just continue upwards through the 4-year cycle. But regardless of that, we have to take these key points as dates of significance where reactionary price action could occur. And therefore we need to be attentive to the fact that we could see tops on these dates, and we need to be aware of what that would look like and how that could come to be. So thank you for tuning in, guys. Hope you all have a fantastic day. Watching very closely this consolidation, watching the weekly close for the total cryptocurrency market cap, and watching how the market responds to the interest rate decision this week. I'll catch you all in tomorrow's video. Have a fantastic rest of your weekend. I look forward to seeing you all then. Goodbye.